So you're welcome, folks. Yeah. So here on British pounds charts, okay, and one weekly chart, okay. So we'll be talking on how you can anticipate price action when price want to reverse, or where is this spooning to, where is it trading to. So you can be able to have narrative of where price is going and what is doing. It's purely price action. So you need to know where price is going, have narrative of where price is going, where is it going to deliver into. Is it going to deliver to a buy side liquidity, or is it going to deliver to sell side liquidity, or is it going to deliver into any inefficiency? Okay, you have narrative of all this in the market. Yeah, here now we have a void, a volume imbalance. This is a weekly volume imbalance. It's a void, it's empty. So it's an inefficiency in the market. Price going up is going to seek for buy side liquidity resting above, or any inefficiency resting above price. Same thing, vice versa. If price is going down, it's going to any of the PDR resting below, breaker, other block, any inefficiency or sell side liquidity. So you can see how price have delivered into this inefficiency volume imbalance, weekly volume imbalance. Between this gap, this candle where price close low, and this candle high where the bearish candle open, the gap there, volume imbalance. So you map out it like this. You extend it at your right side. You can see that's how you map it out. You annotate it between the low and this high. Call it volume imbalance. Volume imbalance. Resting above price as a premium area. Yeah, yeah, now standing as a premium area above price, then below price discount area. So as we are delivered into the weekly volume imbalance, you can see how sharply we drop the body. Watch where the body close at the consequent encroachment of the volume imbalance. To get the consequent encroachment, use your Fibonacci. You anchor from the candle high to the candle low. So this is our 50% consequent encroachment, that half of the volume imbalance. That's how to get your consequent encroachment, by using Fibonacci. That's where the body close. It's a major resistance or support level. Depending on where price is trading at. Now it's a major resistance now. The half of the volume imbalance, consequent encroachment. Yeah, that's half. 50% of this volume imbalance, this inefficiency, it's called consequent encroachment. That's where the body stop. Like you can see, the wick is normal, just a mohawk. Yeah, it's normal, but the body will give us the narrative of what we are looking for. The body will give us, it's not out of this shaded area. We close we close at the 50%, then open at the 50%, yeah, and we drop, showing that here is a major resistance level, it's a premium level. So as we drop, we had a buy side sell side inefficiency here, that is BC, fair value gap. Then we trade a below it as a balanced price range. Balanced price range. So we traded, we have a wick here, this long wick. Half of it stands as a major support and resistance level. To measure the half of it, use Fibonacci. You anchor from the low of the wick, then to the candle open, the body where the wick stop, to get this is a half of it, 50%. 50%, that's where we traded to. The half of it is standing as a major support level, discount area. We anchor as the 50%, the half of the weekly week, this week here, our weekly week, 50%. Go down, you can go down to daily time frame to see a proper price action, what price is doing. Yeah, you analyze from higher time frame to lower time frame, from weekly time frame, to see where price is heading to. Yeah, in high time frame like weekly, daily, when price is seeking for a liquidity, yeah, you can have narrative of where the next draw on liquidity, if one is taken, so price will seek out for the next opposing liquidity. So from weekly time frame, you can have narrative of where price is heading to. Then you go down to lower time frame to see the real price action. Here on daily chart, yeah, you can see here we traded today weekly week, 50% of it, the week that touch it, the week is the week that touch it. You can see how we are trading. Here being our order block, here's an order block, the bearish close candle, the last bearish close candle stands as order block. So while we have our breaker here, this candle here, here is a breaker. We have a low here, we traded up here, we have created a high, then we drop, taking out this low, low, high, lower low. This low is lower than this. Okay, already we have an inefficiency here. Time of the day, we have an inefficiency here, that's fair value gap, where price traded to. And an inefficiency BC, buy side imbalance, sell side, buy side imbalance, sell side inefficiency BC. Actually, here was our weekly volume imbalance. Yeah, you could have narrative of where price is pulling to, because we have target. Our target is price is going to deliver inside the weekly volume imbalance. That's our target. So this fair value gap here, you can see as price traded inside it and deliver, we had a long movement going into the weekly volume imbalance. We have narrative of what price is going to do here since we didn't break this low. So we are looking at every last close candle. If we are bullish, like this kind of movement, it's a bull movement, bullish. So we are looking at every last bearish close candle to stand as order block. We are not able to close, trade and close below it, break and close. Now low, higher low, higher low. We started having higher low, higher low, higher low. When you see this kind of thing in the marketplace, you know we are buying, we are bullish. When we started having higher low, not able to break the previous close candles. Okay, like this price was not able to break below this. So here is standing as order block last close candle. You measure it from the opening. We open from above, then close below for bearish candle. See, that's the order block. Order block, you put it at the opening. The opening order block, that's where we traded with weak last close candle. Here to order block last close candle, while we have our breaker here. Here is a breaker. Last up close candle. Here is a breaker. Last bullish up close candle. Yeah, we deliver inside the breaker, then creating an order block here, last close candle too. Before we do a breaker, before we break above this previous candle, before this down close candle here, then we had a push up, then we break above this previous candle, bullish candle. So price coming back here, standing as an order block. As an order block, where the opening, that's where we traded a break below the order block, then traded to the half of it, that meant threshold to measure it like the half of it. Same with the weekly week 50%. That's where we traded with the week. The half of it, that's the whole candle. You measure it, the half of it, that's the half of order block, mean threshold. That's middle, yeah, middle of this order block, the 50% of it. So that's why we traded with the week. So we go down to lower time frame now. 4 hour. Let's see price action on those levels. What price is doing on those levels. Yeah, you can see here on 4 hour time frame. That is the daily breaker. Yeah, why here is the weekly week 50%. You can see price action on it. You can see we have been trading the week touching. Then same place with the daily order block, main threshold. Yeah, same position. We have a fair value gap here. And also we have a low here. That's SSI liquidity, which price is seeking to come and take. sell liquidity. So price is coming to seek for the low here, resting the sellers liquidity resting below here, then deliver into this daily breaker. Then we have a long wick here. We have to measure it out and see what price is going to do on it in the future. That's how you learn to you annotate it, then see price action on it coming in the future. That's half of the week. That should be 4 hour. Yeah, 4 hour week, 50%. So those levels we can go down to 1 hour time frame to see clear price action. That's how you keep going lower to even 1 minute. See price action. Yeah, we have been having lower high, lower high, lower high. Yeah, this high is higher than all this high. This high now, this particular high, yeah, is the highest high. Then we started having lower high, lower high, lower high, lower high, lower high, lower high, lower high. This is signifying that we are selling. This is a sell side delivery. We are selling short. Then we have target here. This sell side liquidity here. You can see every last close candle is standing as order block. Every bullish last close candle, like here, is a last bullish close candle. The opening, the opening, we open a bullish candle opens below, then close above, while a bearish candle opens above, close below. So if you are marking out for the bullish like this, you mark out from the low opening. If you are marking out as a bearish order block, you mark out from the high, something like here. Yeah, welcome. Can you hear me? So sorry for the interruption. So here is our order block. Order block. From the opening, yeah, that is our order block, bearish order block. You stand as a major resistance. You can see last close candle. This one too close at the order block. It becomes the last close after we drop, coming up to it, trading up to it again. We close lower high. This high is higher than this high. Then here standing as also other block, last close candle. We drop, then we went weak, weak touching it, then we close lower. It's a breaker. It's a breaker. We have high here, we have low, then higher high. We break down, it becomes a breaker. A breaker standing as a major resistance. So coming low, we have a breaker here, we have high, low. This low is the last close low. After this low, no other low have break it until we break here now, making it breaker. That's where we traded to. You can see price action, you can sell. Then put your stop loss above. Yeah, take profit. Yeah. So that's where we traded to at the breaker. Here is the breaker. So taking out this other block to now turn to a major breaker. Okay, so let's go down to 15 minutes. Okay, yeah, in 15 minutes. You can see price action here in 15 minutes different from price action in higher time frame like 1 hour, 4 hour, daily, weekly. 15 minutes now seems like a lot of candlestick due to the time frame. Each candle you see here now is open and close within 15 minutes because we are in 15 minutes time frame. Each candle you see open, rally, went up, then close. Here is the close. The week showing that price will reach out here, price reach at this level, but the body will tell us the story and give us the narrative. That's where we close at the body. The body. Yeah. So here in 15 minutes, you can see we are looking at every last close candle. Here's the last close candle here. Bullish last close candle, high, lower high. Then we are break low of this. We couldn't break high of this. We are breaking low. So we're breaking high. The last close candle here. Then we are breaking low of this last close candle. So we are now don't say other block. As other block. As 15 minutes other block. Okay, go down to 5 minutes. You see, in 15 minutes other block. Now here we're having a fair value gap in 5 minutes. That's a fair value gap. CB. CB, set side imbalance, buy side inefficiency. Created a fair value gap here in 5 minutes. In 15 minutes, here is our other block. So here in 5 minutes, we have a fair value gap now, which is a major resistance, and we have a target. So we created a fair value gap to push price to come and deliver to its target. Okay, we are breaking lows now. We are breaking low. This high is higher than this high. And we had a fair value gap here too, creating opportunity for sellers to short, to keep shorting. You can sell here. This is a delivery to take out the buy side liquidity here. You have a high. This 2022 model. You have a inside the fair value gap. Twenty 22 model. Yeah, we took out a high here. Took out a high. Already we have a high. Then this is a Judah swing. At what time of the day? 2 o'clock. Watch the screen below. That's 14 at 2 5 p.m. So going into the silver bullet, and we created a fair value gap, this fair value gap here. After we took out the high, then we drop a break of structure. There is a break of structure. Had a break of structure and created a fair value gap here. Then wait for price to trade inside a fair value gap. Then you target the next draw on liquidity. You target the next draw. This is 2022 Maru. At what time of the day? 2 to 3 p.m. This 2 this candle is 2:45 p.m. Then we deliver inside is at 3:10. 2 to 3. The fair value gap you said drop at the week 50%. You see the price reaction there. So this is a 2022 model. You can utilize it, you can go over it. After a liquidity is taken, then a displacement. If there should be any fair value gap, wait for price to trade inside it like this. Once it trades inside, look for the next draw on liquidity. Here's a draw on liquidity. You can take your profit here. Then you wait for another price movement in the next session or next day. Okay, you be content, you be okay with what you made for the day, and you don't trade every day. Yeah, you don't trade every day, but make sure you practice every day, you learn every day, but you don't push the button every day as a beginner for now. Okay, so we deliver to take the buy side liquidity here. Here now resting above, resting here buy side liquidity. So we deliver to take it, and we started dropping. We couldn't take out this high. That's close candle of the bullish standing as other block. High, lower high. This high is higher than this. Then we started having lower high. Created a fair value gap, drop, took out the low. We are breaking low, not the lows. We are breaking the lows, not breaking the highs now. Okay, so over in 1 minute. Yeah, 1 minute. In 1 minute, here is a other block, the breaker in 5 minutes. So you can see how price is reacting on them. The body is not able to break above. We watch what the body is doing. The body will tell you the narrative. Okay, we watch what the body is doing, reacting at those level, any level, at any resistance or support level, consequent encroachment of any inefficiency or any of the PDAR. Okay, you watch what the body is telling you, what the body will give you the narrative. Okay, so you take your time and practice. We have our target is here. Our target is here. So we want to price to sell off. We have liquidity resting below. There's a liquidity. There's a liquidity resting below that the algo will seek out for. Now we have this liquidity here. Now we are breaking low. I want to see price break below here. I want to see price break this. then we now turn to breaker. When we have high, we have low, higher high. This high is higher than this. We have a little fair value gap here. We have a little fair value gap. So let's to see price reaction only. Yeah, standing as inversion fair value gap. So inversion, we have violated it. So now inversion. We have a breakaway gap here. A breakaway gap here. We have high, high, low, higher high. Then we break low, created a fair value gap. You wait for price to trade inside here, then you can go sell short. So this is how you anticipate price. Okay, you study about price action, what is going, you have narrative of where price is going first, from your weekly time frame down to your daily time frame, 4 hour, 1 hour. When you go all through all this process, you see that you will now have the narrative, you have the knowledge of where price is going, the next liquidity is going to seek out for, the next inefficiency is going to deliver into. Okay, you take your time and study price action. Yeah, okay, you be safe. Thank you.